Perfect. We are now live. Hello, everyone. See, people are already logging in. That's exciting. Happy Wednesday to everyone. Okay, so while we are getting to know each other as we log in, everyone that's hi, Erica, how are you? See that you raise your hand. Drop me a message in the chat. Drop me a message in the chat, Erica. Everyone that's logging in, why don't you let me know the name of your company and then give me a 1-sentence pitch just to tell me what your company does. Hi, good afternoon. Is it Erin? Hi, Anna from TriNet. How are you? Thank you for joining today. Happy Wednesday. Again, I'm gonna do, let me just put that in the chat. Drop your company name and tell us what you do. And we're gonna get started in just a second, but let's get to know each other. Alice is here. Hi, Alice.
Hello, everyone. I wasn't sure if I was supposed to talk or not. Or come in with the dramatic entry.
All right, so we have Moon Cho, Yin and Yang Living, a spiritual and holistic living to heal your mind, body, and soul. And you're right here in Southern California. Hello, I'm in Los Angeles as well. Hello, Kirk. Kirk from Happy Hour. We are an alcohol delivery company. We all could use that. Advise customers alcohols within an hour. Awesome. Thank you, Kirk, for joining today. Good afternoon, Mark. Oh, yes, sorry that we can't be in person, but listen, virtual is awesome. We get to meet more people. I'm actually really loving this. Hi, Lynn from Sam Pre-Accelerator. How are you, our partners? We have John from Dillshare. You provide financing solutions at point of sale for consumers with non-prime credit. Welcome. Hi, and Erin, you're based in LA as well? Well, hello, I hope you're doing well. We have a Bijou from, I don't know how to, is it Spaz Incorporated? And you're also based in Los Angeles. Well, we have a lot of LA people. I'm very excited about that. Hi, Leslie from Perceive, marries picture content to related audio, video, text, social, and experiential content. That is awesome. I really love that. And you are also based here in LA. Hello, Maria. Hi, this is awesome. Awesome, awesome, awesome. All right. Awesome. So we're going to get started in just a second. Hi, okay, Brianne from Van Life app. You are a mobile app and community helping people access beautiful places in nature. That's awesome. We could probably use that as well right now. Okay, and we have Reg Prentice from Tonic DM. You help professionals make higher quality decisions based on their email, also based in LA. Awesome. Awesome, awesome, awesome. So you guys, you can continue to chat. You can continue to chat with each other. If you need to send me a message, you can send me a message. Whatever you want to do. We want to really make this virtual experience feel like we're all in the same room. I'm super excited to be able to do this Meet the VC with Alice on this platform. So I'm going to go ahead and get started. I'm going to do a little bit of housekeeping intro, and housekeeping is no pun intended, guys. I think we're all doing housekeeping right now. Right, so let me just get to sharing here. All right. Again, today is a Wednesday, March the 18th, and we are going to be talking with Alice Cheng of Upfront Ventures. So just a little bit about me. Yes, this is me with straight hair, same person. My name is Teresa. I am also an entrepreneur. I'm also a writer and journalist. You can find some of my writings on The Green Guide, and that's on earlygrowth.com. Also, I am from Kinston, North Carolina. So if there's anyone from North Carolina, give me a shout out. We are famous for producing some really great basketball players. So that's what we're famous for. So that little bit of housekeeping. So today, this is going to be 40 to 60 minutes long, depending on the Q&A, but we're going to stick to that 60 minutes. That's the Q&A will be right at the end of our chat. You can ask questions at any time. If you do have a question for Alice, you can drop that in the Q&A panel. That's where I'll be picking those questions up from you. Drop them in the Q&A panel. If you happen to drop them in the chat, that's absolutely fine too, no problem. This is being recorded and this will be available on our YouTube channel. And you don't have to worry, we will send this presentation to you via email. So let's get to know each other again a little bit better. I want to tell you a little bit about early growth and what we do. So we are a strategic partner. Our team of experts allow you, the founders, to concentrate on your business, customers, and teams while we lead your finances and accounting. So what does that really mean? So we work with early stage founders, those who are not quite ready to hire on a full-time CFO. We have part-time CFOs, but they have 10, 15, 20 years of experience. So you're getting someone on your team with that true expertise. So what are the categories that we work in? Again, finance and accounting. Taxes. This is tax season, guys. April 15th will be here before you know it. We also work with equity management and we work with fund accounting, which means we work with investors on their fund accounting needs. And like the slide says, this is not our first rodeo. We have been in business for 11 years. We have worked with founders in 40 plus countries, and we've helped them raise $2.5 billion. So you may be familiar with some of our companies down at the bottom, like HelloSign, Indiegogo, Credit Karma, and Stitch Fix. And before we begin, I have to say a thank you to our lovely partners, TriNet. Again, thank you for joining in today. If you're not familiar with TriNet, they provide businesses with HR solutions, including payroll, benefits, risk management, and compliance, all in one. We also are partnered with Silicon Valley Bank. Thank you, Stuart Tweedy. I'm not sure if you're on with us today, but Stuart manages a portfolio of LA's fastest growing startups on SVP's startup banking team. He leverages a background in operations, research, investments to find ways for founders to improve their likelihood of success with fundraising, hiring, and scaling. If you have any questions, you can reach out to Stuart. He is ready to work with you. We also want to give a huge shout out to CMO LA and also Sam. Thank you for being our partners. And here we are, just a little details about Alice. She is an associate of Upfront Ventures. She focuses on science and technology. She previously worked at Boston Consulting Group in San Francisco. And one cool fun fact about her, she has a PhD from Georgia Tech. Awesome, thank you. And we are going to go ahead and get started with those questions. How are you feeling today, Alice?
I am good. How are you?
I'm good. You know, everything going on. I am good. I'm feeling rested. I went out yesterday, had a little walk, and I'll do a little walk later today. So I'm feeling great.
Yeah, embracing work from home.
Absolutely, absolutely. So before we dive into those questions, I just want to get the temperature of our virtual room. If you have already raised a round of funding, drop a number 1 in the chat box for me. I just want to see who we have online. If you've already raised a round of funding, drop a 1 in the chat box. And if you're in the process, oh, we have a lot. Awesome.
Yeah, it's awesome.
If you're in the process of raising your first round of funding, drop a number 2 for me. You're doing your first. Okay. So this is great. This is great. Awesome. All right. So let's get to know you. Where did you grow up, Alice? And what did you want to be when you got older?
Okay, the first part is easy. The second part is kind of hard, I will say. But so I saw someone said they were from South Carolina. I know you're from North Carolina. Someone said in the chat they're from South Carolina. I was actually born in Clemson, South Carolina. Fun fact, but I think I don't even know how long I was there, like less than a year probably. But I spent most of my youth in Pennsylvania. So I'm actually where I grew up is in a little town called Quarryville, Pennsylvania. It's in Lancaster County. If you know anything about it, you know that there's Amish people there, so it's Amish country. So a lot of like good furniture and good chicken and good baked goods. So we were well fed growing up. But yeah, because I was in a pretty rural part of America, tying into the second question, I never really knew what I wanted to be when I grew up because I didn't have a lot of role models in the community. So it was mostly farmers. The people in the business communities own small businesses, restaurants, construction companies, but I just wasn't really exposed to a lot of different career options. So in school, I mean, you kind of know the story now. I ended up getting a PhD, but I mean, while I was in school, I always really liked math and science. But the only thing, I mean, I was told if I went into business, I could be an accountant. If I wanted to study science, I could be a doctor. And they didn't sound like very interesting careers for me. I ended up going to Penn State undecided. And I, at that point, still had no idea like what anything was. I had never even heard of engineering. And I think they're now doing engineering curriculum at my high school, which is great. But at the time, I didn't know what it was. I discovered engineering while I was at Penn State. And I was like, hey, this is a great way to marry my love for science technology with being able to help people, but also kind of being afraid of blood because I couldn't really be like a medical doctor. But we do need those today. And so I have so much respect for people working in the medical field now. But I did end up being more just on the bench side and obviously now today more on the business side. But yeah, growing up, I mean, I think initially I wanted to be a teacher. Because I was in school and I think that's changed. I will say even today I don't really know what I want to be when I grow up, and I think that's kind of the exciting part of just being in a fluid career and being able to see a lot of different companies too. I think that's a really exciting part of being in venture.
Yeah, that's really cool. And to be honest, I mean, I think some of your job does involve some type of teaching, even though you didn't focus on it, but it's still kind of incorporated.
That's fair.
So you did mention that you got a PhD from Georgia Tech. So what exactly attracted you to becoming part of the venture capital world? What was it about it?
So I think it was probably a process. I will say the major overarching theme is that I'm pretty extroverted and I tend to be attracted to people. And so what attracted me to venture were the people. But I mean, living in the South, I mean, at that time, so I was at Georgia Tech. My advisor actually moved. I ended up moving to Richmond, Virginia for a while. I've lived in so many random places. But I mean, at the end of your PhD, it's like 5 years, you're doing the same thing. And I was just like, I need to get out of here. Like, I really like science, but I think it's time for something different. At the time, I was involved in a lot of extracurricular activities, student government. I had done consulting club. I had done all this other stuff. And I just was really still attracted to the business world, even though I love science, but I just wanted to see that science being translated. And the kind of like the innovation on the technical side was there, but I couldn't figure out how to move it out of the lab. And I thought it was really important. And on the other side at that time, all these articles were coming out about, I mean, Elizabeth Holmes and Theranos, which by the way, at that time I adored her. I thought that was so cool. She was a cool female role model. Unfortunately, that went south. But there were profiles like that were really inspiring to me at the time. And I was like, hey, I could really do something. And with science, you could actually be on the forefront of changing the world. And I thought that was so exciting. And I was really looking up to these people that I had just read about, but I never really knew. And I was like, okay, this like startup world, that is probably the world I want to be in. And at the same time, and like a lot of the VC profiles and stuff, how the media is shown in the media. So that's what initially attracted me to venture. And then were the people. And then I was like, okay, what do they do? Like, is it something I would actually do or I have a skill set suited for? And I started looking more at the technical side of things and saying like, okay, I want to focus more on where my academic training is, but also what are the skill sets I need to learn, right? Like, do I need to learn about like modeling? Do I need to learn about markets and economics and I don't know, just like basics of starting a business, which were all things I had no exposure to in grad school, like maybe in a theoretical sense, but nothing really on the ground. And so that's what kind of provoked me to go into consulting to kind of gain that business toolkit. But really, but it was kind of all with an eye toward getting into venture eventually.
Yeah, I love that. So you've been a part of 3 startup ecosystems. You were in Atlanta, you were in Silicon Valley, and you're now based in Los Angeles. Are there any advantages of being in one ecosystem over another? Do you feel like they're the same as far as being able to get venture capital?
So I will say every ecosystem is different, and they all, differences mean pros and cons. I would like to highlight the pros, but it is different. So in Atlanta, I mean, the really great thing and why I chose to go there for grad school, it was a joint program between Georgia Tech and Emory. Georgia Tech's a really great engineering school. Emory's a great school of medicine. And so together, it's really strong for people who are studying biomedical engineering. But it's really like in an ecosystem where you have two maybe different or kind of related things that are very strong and you can work together and collaborate. That was really strong for Atlanta. And I think people call it like the New York of the South or whatever, but it's also just like a huge city. Cost of living in Atlanta is amazing. I really enjoyed my time. I love living there. I still think it's a very underrated city, like for across the board. I think, and maybe it's just like not that many people are moving to Atlanta, but the people that I've lived there, I've always connected with. We all love it. And so I love that ecosystem. In terms of venture, and I was only there for a couple of years, right? So I haven't been back in a few years now, so I can't really speak to how the ecosystem has changed. It was early when I was there, but there were a lot of efforts even at the university level to start spinning out tech, right? Because if that is the foundation and you're working with universities, you can get a lot spun out. We had graduate programs that were focused on commercializing technologies out of the lab. And then I think like sometime last year, I had a call with a group in Atlanta with a venture group that is now doing a ton more events. They do like Startup Atlanta now. And so there is a lot going on down there. You probably know more about it than I do, but I love that ecosystem. And I think there's a lot of potential there too. So I'll kind of leave it there with Atlanta. After that, I moved to SF. I think that is like the quintessential, what people think of when they think of tech or startups. And then, all the other things that people say about lack of diversity and all that stuff is also true. But the nice thing about SF is like, it's still a place where people are willing to move to and where a lot of capital is. And so, if you think about fundraising, it statistically is more likely probably for you to get funding if you're living in San Francisco or the Bay Area, just because there's so much more capital. So that is great. It was a great place to kind of get my career started. I'm now in LA, and I will also caveat, because I work more on the science and technology side, I'm going to speak to this a little bit more. Upfront is a generalist investor, and so I can kind of speak across the board, but really my experience has been more focused on science and technology. LA is really exciting. And first of all, shout out to everyone on the call here who's from LA. I saw there are a ton of people here. I will say off the bat that like so much more diversity, great talent. It actually is, I think we graduate the most engineers. Our city graduates more engineers than anywhere else in America. And I think it feels a little bit separated because geographically we're separated. But distance wise, like, I can drive 2 hours and get to San Diego. I can drive an hour and a half, maybe in rush hour and get downtown. It's really no different than driving from Berkeley to, to South Bay. So I think it's more of a mental hurdle for people to get over rather than like a physical, I can't get across town type of thing. And I've suffered from it myself. I hate traffic, I hate driving, but I think the ecosystem is there. And I think there's just so much potential here as well. And one of the things that I love doing, just personally, I like building things. And so the chance to be able to build a strong, what we call deep tech ecosystem here in LA is really amazing. And Upfront's been around forever. We were started in '96, and we saw the emergence of the tech scene here, right? So like now you have Snap and Tinder and all the big like Googles coming down here as well. So you have the tech scene here already. And now it's kind of building this other, just making it even more diverse and capitalizing and leveraging on all the resources that you already have at the university level and the really smart talent. I don't even say the issue, but what we hope to do is to get people to stay here, because people are starting off here from school, and it would be great if they could stay, and then we keep that and we can grow the ecosystem even more and become stronger.
Love it, love it. So before joining Upfront, and we've talked about it several times, that you do enjoy the intersection of technology and science. But can you explain a little bit more, what does that look like, and what companies have you worked with that meet that criteria?
Yeah, great question. So we are, because we're a generalist firm and our roots are more on the tech side, we talk about, I guess, life science investing as more investing at the intersection of tech and bio. And the reason we say that is because there's kind of two different models, and there's kind of like the life science pharma venture model, kind of traditional biotech model, and it's very small molecule focused. Although these days everything's kind of shifting, and people are looking at cell therapies and other sorts of therapies, and not just kind of what was traditionally considered. And there is more of the tech model where it's both the business model side, so both from like an asset perspective, and also the funding, when you think about raising around, the round size and dynamics and things like that are a little bit different. But we kind of like to come from the tech angle. And I just say that, so when we look at technologies, we prefer platform technologies. So this is, I'm sure people have heard of CRISPR. It's just a really good example. I know it's kind of been overdone, but it's basically, a gene modifying technology, but this one technology is the platform for basically targeting so many diseases, so many indications, that has so many applications. By tweaking, you have kind of like the backbone technology, and by tweaking that technology, you can do so many different things with it. And that's what we mean by platform technology. In biotech, I think, that meaning has also maybe evolved a little bit, but traditionally platform just meant you had different indications, and it could also mean you had different assets. So meaning you have a molecule that targets indication A, you have a molecule that targets indication B. Whereas here, it's really like the underlying technology that can be used to target A, B, and C, but with some minor modifications. And to make that more concrete for you, so one of the companies that we invested in is called Bionaut, and they are using remote controlled robots to be able to move through tissues in the body and deliver certain payloads. So for example, like deliver a cancer drug to a tumor site. And so this is what we think of as a platform technology, because it's basically, it's what we think of as drug delivery, but it's physically delivering it in your body. Whereas, on the biotech side, we think of drug delivery as maybe modifying a molecule or having a different nanoparticle or whatnot, or a different way of like, using a nebulizer instead of, injecting or something like that. We're literally creating a robot that's just going to like go to the tissue and deliver the medicine. And so, all of this is in early stage of development, but I think that's what we mean when we come from more of the technical, a tech perspective, and look at that intersection of life science and biology. But, we're also, again, we're very generalist. We consider so many technologies. And so that is not like a hard and fast rule, but it is kind of like a preference and where we come from on that side.
Yeah, Kirk just said that's impressive. I totally agree with that. And that sounds really exciting, something that we definitely will need in the near future. So let's get into a little bit more about Upfront and the investments that you do. So Upfront likes to invest early on, which means you put a lot of focus on the founder and the founding team. So tell us your ideal founder slash team to invest in.
Okay, so I'm gonna differentiate between maybe like a scientific founding team and
Yeah.
like on like a tech software team. I mean, it really broadly applies to both categories, but we really, because we're early stage, I mean, yes, the business model has to be good, the idea has to be good, there has to be a market, et cetera, et cetera. But really what's defining for us is the team, and typically it's the founder, and usually that's one person, sometimes it's two. But I mean, we look for people, and we're going to be talking about coronavirus in a second, but it's like situations that you cannot expect and you cannot predict, and you don't know what's going to come out on the other side of it. We look for people who are able to adapt to situations like that and come out from a challenge and come out stronger. And you know, we don't know what's right, but you have to trust in the person to be able to be agile, be able to adapt quickly, to be able to think strategically, to communicate with, you know, their customers, their team, and their investors during that period of uncertainty. And so that's just really important for us to see up front. And then the second thing is really we have this kind of, I mean, it's called founder upfront fit, but really it's, you know, every partner that works with the founder, we make long-term investments. So it's like, you know, it could be a 10-year relationship. It could be like a 15-year relationship. It's a long time. And we like to get to know people before we make that investment, because we know we're going to be around for a long time. So part of that is building trust. I mean, part of that is showing that you're able to be a good CEO in those challenging conditions. But really it's to build a relationship with our team, and to show each other that we would work well together, right? So it's also kind of, it goes both ways, and we have to get to know a founder, and the founder should get to know us as well. And I think that's always really important when any founders are talking to investors.
Yeah, that is. I love that, because it's a relationship that both of you are building. So
yep,
want to get to know each other. Let's talk about, yes, right now, and what's happening the coronavirus and how everyone's world has kind of just changed in the last week or so. No one definitely could have predicted this happening in 2020. How is this affecting the type of investments that you'll be making in the next 3 to 6 months, and the potential recession that may come?
Yeah. So, I guess, first of all, before I say anything on any of that, I think our number one priority as investors is people today, even as our individual responsibilities, are just to make sure we're all safe and healthy, and kind of just can, personal health, I think, is like number one priority here. So, before I kind of answer the question just more broadly, like, we really want to make sure, our team, we're all working from home, right? Like, that was kind of like mandated this week, and even, people started last week. We want to make sure our portfolio companies are well taken care of, and we can talk through any of the changes, anything that they want to talk about during this time, but really, like, making sure that their employees are getting taken care of, and that they're being safe. And so that's kind of just, let me caveat that before we go into the rest of that. But that is really the number one priority at this time that we're focused on. And then, so now when we talk about, okay, well, the second thing, about the recession, I have no idea. This is something we can definitely not predict. I mean, you can probably read different reports on it, and people have different opinions on it. Things are definitely changing, but it's really hard to predict economically what's going to happen. There's a lot of different policies that may or may not be put into place soon. And so I think all we can do is wait and see. On the venture capital side, I will say that, venture capital as an industry, we have gone through these types of environments before. I mean, obviously not exactly this, but I mean, think about 9/11, think about the recession in 2008. Think, there's kind of places where, we have seen more of a broader economic crisis happening, and venture capital has gone through that, and we've actually always come out, and we've always, been able to, either hopefully stronger as well. The only thing is, I will say, we we just want to, in terms of like sorry, I'm trying to frame this. We just don't know what's going to happen. And so I think right now it's the way we operate. We still think of investments as long-term investments. I mean, that is venture capital as an industry, right? So when I talked earlier about a 10-year timeline and a 15-year timeline, I'm not saying venture capital is weathering this because we're so much, like we're so much better than any other industry. But really our fundamental philosophy in investing is that we're investing for the long term. And so when you think about something like this, like, yes, some companies and some firms may be impacted, but if you think about the investing philosophy of venture capital, it's really investing for the future. And so if we can invest for 10 years down the road, then, like, yes, today may impact some things, but hopefully when we come out of this, whenever we come out of this, we still have companies that are really strong and that we're funding in the right places. And so that's kind of our hope for the future. And then, to answer the last part of that question about how we're thinking about investing, I mean, things may shift again, like dynamics and timelines, right? We don't really know, but we're still committed to investing in the best and brightest entrepreneurs. And that's kind of how we think about it. Again, like tying into more of like the long-term innovation.
Yeah, and it's still pretty early. I think everyone's trying to figure out what to do next.
Yeah.
What's the next best step? So for the founders who already said that they were getting ready to start a round of funding, how should they ride out this wave? What advice would you give them?
So again, early, but I would say the number one thing that we think about, cash is king. And so it's just so important to conserve cash right now, to be conservative with your spending. And even when you're raising, I think it helps show two things. So one, I mean, first, it extends your runway. So when you're raising and inevitably things are going to come up and things will be delayed. And this is what we tell every founder, regardless if there's a coronavirus, epidemic or pandemic or not, is to always kind of plan more time for your fundraise than you think. So one, that allows you to conserve more cash and extend your runway. And two, it also helps investors see that you can be very responsible with cash. And so let's say you're raising 2 million or 4 million or whatever the number is, maybe you're raising 30 million. It shows that, okay, like obviously I can spend this money, but I know how to pull back and I know how to extend that runway and be responsible with this money. So yeah, cash is king. That's correct.
Awesome. So let's circle back because you kind of talked a little bit about this, but relationship building. Why is it so important to you to not just jump right away into, hey, I need a check, I need investment? Why is that so important?
So I am going to quote Mark Suster, who's our managing partner, and he wrote this blog post I don't even know when it was, but a while ago. It's called Lines Not Dots. And so when you think about a single interaction with a person, that is like a dot, right? So I can meet you today. I have kind of like this data point on a graph in my head or whatever. And that's kind of one data point, that's a dot. And if I meet you 2 weeks from today, I get another dot. And, maybe that's helpful in 2 weeks. I don't know. If I meet you 6 months, I get another dot. And over time, like let's say we build this relationship over a year, I get a couple, like let's say I get 5, 6 dots, that becomes a line. And I see how you trend during, let's say, even if it's like over this environment. And someone just asked how we're getting to know founders in this environment. I mean, I think, we're still meeting even virtually with people, right? So you're getting these touch points, and even if you have a limited data point, it's still data, and you can kind of track that over time. So that's the lines, not dots kind of philosophy that we ascribe to. And I think that really helps us understand how founders think. When we talk about earlier, all the things, right, that we look for in a founder, are you agile? Are you strategic? How do you think? How do you get through certain circumstances? And also, do I want to build this 10 to 15 year relationship with you, right? That comes with these lines, and they're always kind of plotted on these different axes depending on the situation. But that's kind of how we think about it, how we think about building long-term relationships. And, of course, because we're big supporters of the ecosystem as well. I mean, we also love just meeting people. We cannot fund obviously everybody, but it's always good to know people, and it's always, there are more ways to help each other out. through connections and through events and things, even things like this, right? I think it's great. We're big supporters of the ecosystem in general.
Awesome. And thank you for that question, Marcy. That was such a great question, which actually leads me into Alice. She told me she takes cold emails. And I love this. What's the best way to getting a meeting with you through a cold email?
You're opening up the floodgates, but no, I actually love talking with people. And okay, so I'm open to cold emails. I think there are good and bad ways to write a cold email. So I will say, if you are going to write me an email, please be targeted, and please, you don't have to like recite my resume, but like understand my background and why you're reaching out to me versus someone else on my team. It's something that happens a lot where it's like, I get an email, I look at the person I'm working with, like I sit next to my team. So I'm turning over and I say, did you guys get this email? If the answer is yes, and everyone on the team gets the same email, it's like, we're all going to delete it. But if there's a reason you need to reach out to me specifically, if I can give you feedback, if I can look at a deck, if maybe you're raising, maybe you want to just start the first dot in the line relationship, whatever it is, let me know. Be kind of specific and targeted in why you're reaching out. And then if you can, please include a deck if you're pitching or want to tell me about your company, or like a blurb or something. It's just sometimes, people say, oh, I'm raising, this is what I do. And I'm like, I have to just respond and ask for a deck anyway. And then it's just more interactions that are unnecessary. So include something, even if, I know some things are confidential. So, always have a non-con deck if that's, an issue. I know therapeutics companies, that sometimes is an issue. But yeah, that's totally fine. Please do not reach out and call the office. I have people email me and say, here, can we set up time? I'm going to call your office tomorrow and set up time. First of all, we're all working remote, so that's not going to work anyway, but please do be respectful, at least of, our inbox and our phones and things like that. I will say there are some emails that do go to spam for some reason. We have a weird spam filter. So like, feel free to follow up if you don't hear from me in a while, but I do actually try to respond to most people. But it also depends on our capacity, right? So sometimes we have stuff that we're dealing with and we can't respond to everyone right away. But so I'm totally open to receiving cold emails. But also I try to go to a lot of events. Like, this is an event, we didn't do in person, but we can do online. And, I'm looking forward to getting questions and interacting with people here. But that's also a great way to meet people. If you know that they're going to be at an event, any investor or any other person you want to meet, it's a great way to get in front of them physically in person or, via WebEx.
Awesome. And I have two more questions for you. Could we talk about that due diligence process? What does that look like for founders?
Yeah, so there's I think it can vary a little bit, but typically there's the first meeting, right? Where it's like, you tell me about the company. We probably separately after the call or the meeting, we'll dig into the market a little bit, dig into the competitors a little bit. It's not like you give me the pitch and then I spend 3 weeks in diligence and then like give you an answer, yes or no. It's really an iterative process, a collaborative process, right? Again, we're building the relationship together. So let's say we have the meeting, I go home, I think about it. I have some questions about the market. I have a question about a competitor, right? Like I'm doing my own research, but then the next day or 2 days later, we'll have another call and I'm like, hey, I have these questions. Can you just walk me through them? Walk me through how you're thinking about this. Oh, coronavirus. How are you thinking about, whatever, and all these things that are happening kind of in real time. That happens probably over the course of like 2-3 weeks. And this also varies, right? Like timelines always vary depending on, sometimes founders aren't even raising and we want to get to know them ahead of time, but this is kind of like generally the process that happens over like 2-3 weeks. We'll dig in deep more on like the market and the product. We'll ask for product demo. We like to get to know your team. So meeting you, but maybe meeting if you have a, head of product or depending on kind of what company it is, right? If there's a head of product or maybe like a CSO, if you're like a therapeutics company, that is really important to us. And then thirdly, we actually will do customer and personal references, which I did. I think most people will do customer references. They'll do business references. We will do personal references. It is just, again, when we talk about relationship building, we talk about being able to work together to like a marriage, right? So it's like, if you don't know how this person is, just even outside of a business context to work with. So it's really helpful for us to just get that feedback. And also, we take everything in stride. We know who we're talking to, right? Hopefully, if you're giving us a reference, hopefully it's good. But, everything we kind of take into consideration. Maybe sometimes I say this more thinking about the scientific side. There are a lot of grad students that come out of labs that maybe didn't have a great advisor for some reason, or didn't have a great working relationship. I think we understand that really. It's more just like understanding your work ethic, understanding, if you're able to if you're like a pleasant person to work with, that's really it. Yeah.
That's always important.
Yes.
And then after you decide that you're going to make an investment into a company with a founding team, how do you like to work with them? Are you checking in with them frequently? How does that look?
Yeah, so we typically do take board seats so that, board meetings happen usually once a quarter. So you're at least getting those touch points. And hopefully you have more frequent interactions where it's like, okay, we'll have a lunch, or we check in once a week on whatever the issue, usually it's not even an issue. It's just like whatever is happening, right? Like, is there, like we hired a new sales guy, how's he doing? Like, just kind of like really just brief touch points, just like stay engaged, make sure we know what's going on. But the board meetings are more formal. On the other side of it, Upfront does have a head of marketing and a head of talent. And so we've recognized that kind of the major, I guess, challenges for early stage startups is hiring. And so they are welcome to work with our head of talent in terms of like, how do we look for people? What are the strategies? What kind of questions do we want to ask? Like, what kind of person do we actually need? And so to think through those things as they're hiring kind of like their first few people, and even as they scale, right? I think that's really important. As something that Upfront provides. And then our head of marketing, she's great for things like, I just raised, like, when should I announce my fundraise? Should I announce it? I want to keep stealth. There's, we think there's an article coming out, like, or we want to write an article, like, who do we reach out to? And so she kind of like handles PR side of things. So I think there's a lot of different ways to use Upfront, besides just, like working directly with your board partner, because we do have a team that has expertise in different areas, and we really try to leverage those.
Awesome. Thank you, Alice. That's all I have, but we're going to do some Q&A.
Of course.
We're going to do some Q&A. For everyone that's on, I have a special promo for you. It is a tax promo, so stay to the end so you can see that tax promo I'll share with you for all who have not filed their taxes yet. I am going to head to the chat and the Q&A to see what kind of questions we have for Alice. Also, can we give Alice some love? Thank you for being here on this Wednesday on Zoom to share all this knowledge. Thank you so much, Alice.
Thank you, guys.
Appreciate that. Okay, so hi, Felix from Helen Health. Okay, so we'll try to answer this question. We may not be able to, but in light of COVID-19, do you anticipate a slowdown in VC funding in the near term?
In light of COVID-19, do I see a slowdown in VC funding? I mean, I think you can read about what's happening today, but honestly, I can't speak to what other people are going to do. It's really hard to predict. I mean, there will be different players in the situation, right? But I will say for us, we are still committed to funding people. But I mean, timelines could shift a little bit. I know, like there's just we're working from home now, right? Like people are they have kids, founders have kids, right? So like even getting meetings scheduled could take a little bit longer. But yeah, I mean, I think, the important thing is, again, conserve your cash, try to extend runway if you can. But I think most VC, I will not speak for other VCs. I don't want to do that. But for us, we are still committed to funding, and we are still committed to speaking with entrepreneurs and taking new pitches and things like that. So should not be an issue.
Awesome. This is Kirk from Appy Hour. I have been asked to demonstrate my business model at a low level by way of sales, but an investment is a dependency on me to demonstrate that. How can I attract some level of seed investment to build the trust to an investor to get a true investment? What comes first, the chicken or the egg?
Oh, is this a question of should you get funding or should you get, it's like funding and then customer traction, or hold on, let me see if I can.
Clear that up for me in the chat box for me. And then I'll reread your question. And as he's doing that, I'm going to go to the next one. How many deals does Upfront plan to do in 2020? And how many have already been done?
So we are, I mean, we're still toward the beginning of the year. I guess we're in Q1 still. But I would say we're relatively on track. We typically do 10 to 12 investments a year. So we really don't do that many. We have a pretty concentrated investment strategy where we try to, and by the way, sorry, I don't know if this was sent out to anybody beforehand, but we're on our sixth fund. It's $400 million. So for us to make only 10 to 12 investments a year, we really save a lot of the fund for follow-on. And so the strategy really is, we'll write the first check and then we just try to have enough reserves to follow on to that. And then, if you kind of work backwards from there, 10 to 12 investments is like maybe one investment a month. But again, it's not really like, oh, it's January, we got to do our investment. It's more like it just kind of happens organically throughout the year. So I would say like on an annual basis, that's kind of how we think about investing. And it's hard to predict. I can't be like, it's March, we've done 3, but you'll see funding announcements from us this year, and we have done new funding. So I would say we're on track.
Awesome. Thanks, Anastasia, for that question. So Kirk cleared that up for us. He says, I need funding to truly demonstrate the model. Is there another way to do this without proving the business model first, as far as getting funding?
Oh, I see. Well, okay. One thing I'll say, I think I wrote this. I know there were some pre-questions that you had asked me that I've written. I don't know if you're going to post those, but I don't want to be redundant, but that it's kind of one of the things I wrote there. I think, so there's 2 things. I mean, one, I think it's important for people to understand what venture capital is for and when/if you need venture capital funding. And I think there's just like VC is sounds very sexy and it's kind of like all in the media, and obviously I'm a big proponent of it because I work in the industry. But I think, if there's something that you need to test, maybe determine is it venture funding that you need? Is it maybe like a friends and family round, like an angel round that you need? Can you do it with debt? Can you do it with maybe a different source of funding? I know people are crowdfunding now. I'm not saying that's, a great alternative, but it could be an alternative. I don't know. I think there's different ways to get creative about that. And it also depends on your budget, right? If you need if you come to me and you're like, I can't prove this business model, I need $5 million to prove this business model, that's not going to sound good either, right? I'm going to be like, well, how can you be scrappy and get some data with a relatively small amount of capital, right? So if you think that way, and I think it's okay to tell VCs that, I think it's okay to say, hey, I'm only raising 500K and I'm going to do these 3 things. And I think maybe because I come from a scientific mindset, I think of them as experiments, right? So it's this is my experiment 1, this is my hypothesis coming out of that experiment. And this is 2, 3, and 4, whatever. And this experiment's going to cost 100K because I want to test my marketing levers, or I want to understand my customer more, or whatever. I think it's okay to test that messaging with your VC, especially early stage VCs. I think they should understand. If you're still not getting a lot of traction there, again, I don't know. I think maybe it's worth stepping back and 1, maybe reconsidering your model, or 2, thinking about alternative sources of funding, right? It could maybe just not be a good fit for venture, right? It doesn't mean that your model is wrong. It just, maybe you don't need venture capital. Maybe you could be cash flow positive if you just took out a small business loan. I don't know what the situation is, and I don't, want to presume, but I just, I think there's different ways to kind of play around with it. But I do think the key is being honest with people. And I think it's okay to say, hey, I don't know the answer. I'm going to test by doing these things, and this is how much capital I need.
And I'm I'm going to ask this question because you just mentioned traction. So I have a question from Marcy, and she said, how are you thinking about KPIs in this new environment? Do you think the benchmarks will change?
I think it depends on probably the company and what KPIs you already have, but every company is different, right? We have companies that are like, I don't know, I mean, I work with therapeutics companies. It's like what you're only doing R&D, right? And then I work with companies that are SaaS companies and they're growing and you have all these metrics that you're looking at. I mean, I think, things could evolve. I don't know what that answer is. I would say largely kind of probably like main KPIs. And like, again, we talk about cash a lot. So like cash, maybe sales, maybe just like understanding resourcing would probably be really important at this time. But yeah, I mean, we just think about companies that are able to control their destiny, right, through their through an operational lens, through cash lens, things like that. I mean, that's powerful anytime, but especially in an environment like this.
Yeah. This question is from Felix. He said, what are your thoughts about investing in women-founded and co-ed founded diverse teams?
I love it. And one of the things that we do at Upfront, I should say that we now have a partnership of 8, 2 of which are women. I know that's, we're still a ways from getting there, but it's making progress. We have a strong commitment to diversity, and it's actually in our term sheet that when founders are interviewing for, I think it's like an exec level position, that they consider people who are underrepresented in the industry, right? So like that applies broadly across, sex or race or anything like that. But, we can't force anything to happen. We can try to look at diverse teams ourselves too. And that is what we do. But, even when we pass along when we fund companies, we try to ask them to consider that as well. And so it's something we do really care about.
Yeah. What is the typical check size from Upfront?
4 million. Good question. Sorry, I should have prefaced this. Yeah. So average check size is 4 million.
Thank you. I think it's Marjay. Thanks for asking that question. Let's see, what are the metrics Upfront likes to see for pre-revenue SaaS companies, or are they not interested in pre-rev SaaS? Are you able to answer that question?
Yeah, I think I think it depends, right? I mean, because the 4 million is average, by the way, right? Like it could range from whatever, 1 million to 10 million, depending on the round. I think and we invest in seed and A companies. Sometimes we're the very first check. Sometimes we are the second check after like a pre-seed round or something like that. But I think it really depends. Like if you are, let's say we already know you had another company, you were maybe acquired and you're coming out of that now and you're starting this new company. It's a SaaS company, you're pre-revenue, but you already know the people that you're going to bring on your team and you know the industry because you've worked in the industry. I mean, I feel like that to us is something we'd consider, that pre-revenue. Let's say, you're in a field that's a little bit more crowded and which is more likely these days, right? Because there's so much stuff going on, but let's say there's 2, 3 other competitors in your field, everyone's early. It's just too early to tell who's going to emerge. In that case, maybe we'd want to see a little bit more traction. So I think it all is case dependent.
This question is from Vivek. Hi, Vivek. What kind of investments do you make in health IT or digital health?
Yeah, so we have, I think at least 2, 3 company. I might be missing because we have a pretty large portfolio. So we are investors in a company called Revelier that does more like data auditing for health data. We're investors in Canvas Medical that is more like primary care, like workflow software. And we are investors in a company called Path. I don't know if it's still health. It's more like benefits, employer benefits for people with addiction, for suffering from like substance addiction or substance abuse. And so I think we're pretty broad across that spectrum. I mean, we're definitely interested in digital therapeutics. We look a lot different things in this space. And so I wouldn't peg any like one thing. Again, I will say we do prefer something that's more of a platform technology. So if you can apply to different indications, that would be great. But really more on that side. On the digital side, I think there's a lot of consideration about long sales cycles. And so I think it's really important to prove that you can either expedite the sales cycle, or that you kind of have some sort of unfair advantage in the industry already, where you can get contracts faster, people. But yeah, we are totally open to really any like the digital healthcare space more broadly, I guess I'll say.
This next question is from Alan. He is from Kipsy, and Kipsy is a children's gift registry focused on experiences such as a trip to the museum, music lessons, etc. That sounds really cool. His question is, for those startups that recently launched and are still in the process of acquiring their initial set of users, do you have any advice on how to approach these customers in the short term, especially because of what's going on right now with coronavirus? How should he be able to do that? And in their case, parents are canceling birthday parties for children gatherings, which means they temporarily don't have a strong desire to set up a KISB registry.
So I'll say because I don't know your business that well, I don't think I'm in a position to offer business specific advice. I will go back to my thing, which I was harping on earlier, which is really just try to conserve your cash, try to be smart with spending. I mean, if marketing, if marketing doesn't seem to be working, maybe that's something that you could pull back a little bit from, right? But it's very hard for me to provide commentary on that. But yeah, I think, nobody has any idea what's going to happen. There's a lot of, people are working from home, kids need activities, right? So I'm sure there's a way. I don't know what the way is. I think I'd have to probably spend more time with your team or something, but I think there are definitely opportunities. I'm just not in a position right now to answer that question. Sorry.
It's a great idea. I love the idea, Alan. And I'm going to ask one more question, which is the burning question. What's the best way for people to contact you, Alice?
Oh, yeah. So I have a LinkedIn. So you can add me on LinkedIn. My email is alice@upfront.com. So you can email me. Again, I can't guarantee a response. I will try. But please be targeted, and please have specific messaging for me if you do email me and ask for something. But yeah, feel free to reach out.
Awesome. And I'm going to see if I can share that promo with everyone. Again, just want to remind you who we are. We are Early Growth. If you have any needs, especially if you have a need for some help with your taxes right now, we are your person. We do help with finances and accounting, taxes, equity management, and fund accounting. And that special promotion for those who are set up as a C Corp, you can get $500 off right now for your taxes if you just go to earlygrowth.com/tax promo. The deadline is April 1st because we need time to be able to do your taxes. So again, earlygrowth.com/tax promo. Deadline is April the 1st. And again, thank you so much, Alice. This was so helpful. I'm so glad that we were able to do this again, and hopefully we get to do it again in the future. So thank you.
Yeah, thank you guys. I love the comments. I have the little box up here, so I'm like trying to answer and read them at the same time. But this is actually, it's the first time I've done something like this, and I love it. I think it's probably, I don't know if it's more fun than physical, but I think it's pretty cool. Like to be able to see what everyone's thinking about and writing about is something you definitely can't do if you were in person.
Yeah, and I want to thank everyone who joined today. Again, yeah, like Alice just said, I know we were supposed to meet in person, but thank you for taking a chance and actually joining the conversation today online. This was really cool for me. I hope to see you again for the next one, which I think is next week. You can check that out on earlygrowth.com. You can see all of our events for the next 3 weeks. So I do hope I see you guys next week and the coming weeks. All right. Thanks, everyone.
Thanks, everyone. Stay safe and healthy.